Alright, so in today's video, I'm gonna walk you through the simple top-down analysis. Nothing complicated, just the way I break down the markets from the higher time frame to the lower time frame. And if you've been struggling with finding the market overall direction, this can help you see the markets a lot clearer and make better decisions. So let's get into it. So just before we start, I want to show you that in the last 2 months, I made almost $40,000. You can see right here, $18,000 for this month. You can see all of the trades right here. Of course, you can pause the video, you can do whatever you want. Also, another thing I'm going to show you is my other channel where I literally document my every single trade I take in the live market. And if you want to check this channel out, it's going to be linked down there, so you can do that right after the video. And this may not be hundreds of thousands of dollars like your fake demo gurus out there, but it's honest truth results from a 19-year-old day trader. So yeah, without any more yapping, let's just get into the video. Okay, so the first question I want to ask you is, what time frame is in front of you right now? So what is this time frame? Can you tell me, is this daily time frame, 4-hour time frame, 1 hour, 1 minute time frame? Like, can you tell me? And of course you cannot, because all the time frames are the same. All the time frames are fractal, and basically they all move the same, they all behave the same, and that is going to be the point of today's video. So the point of today's video is going to be that we can refine from the, let's say, daily time frame to hourly time frame for more confluences, and then go all the way to, I don't know, 1 minute time frame. But I'm going to show you how you can execute on every single time frame, and exactly what is going to be the difference between executing on the daily time frame and on the, let's say, 1 minute time frame. And all of these trades are going to go off of the same principles, same confluences, same everything, except they are going to last different amount of time, and one is going to take days and weeks to play out, another one is going to take 10 minutes. So just before we start with the actual trades and with actual chart, I want to just quickly explain to you these two confluences. You already heard of them, but I'm going to explain them one more time, and I'm going to say what are we going to look for with them, and basically what do they even do on the chart. So the first one is going to be fair value gap, which is this one right here. And basically what it is, you already know it, probably a lot of you. It is just this imbalance between 3 candles. So we need in total of 3 candles to create fair value gap, and basically these wicks are going to determine how big the fair value gap is. So for example, if they change like this, fair value gap is going to get bigger and it's going to get smaller. And if the wicks cross over each other like this, then there is just no fair value gap there. And what is fair value gap going to be used for? So basically, once the market goes to the upside like this, and later when it comes back to the market like this, we are going to want to look for some kind of rejections to the upside, and basically for trades to the other direction. And we are also going to use them for entries, but more on that later. And then we have liquidity. So basically, what is liquidity? So let's say market is going to the upside like this, and we are just uptrending, market is going to the upside. Everybody knows that market is in some kind of uptrend and it's just going to the upside. So what are people gonna do? People are gonna find their basically zones in the market, and they're just going to buy from them. So let's say for example, we have some kind of supply or demand here, or some kind of zone that people want to buy from. They're going to buy from that zone, and they are going to target, of course, some kind of high up there, and they're going to put their stop losses always on the lows or highs in the market. And basically that is going to be our liquidity, because we are going to wait for those people to get manipulated out, stopped out, and basically that is going to be fuel for our trade to go into our direction, because some people are going to get manipulated, stopped out, and the other side of people are going to think that this is some kind of break of structure, so they are going to enter another position like this to the downside from their kind of zones or something, and they're going to target, and also they are going to be our fuel to the market to basically help our trades have the most win rate possible. So now when you know that liquidity is used basically for reversing the market, and fair value gaps are basically used for market to come back, retest them, and then to continue moving to the upside, we can move on to the live example. So as you can see right now, we are on the daily time frame. You can see it up here. So this is basically each candlestick right here represents a whole day. So basically every single candlestick is 1 day right here. So what are we looking for? We said that we are looking for obvious lows and highs, and what can we spot instantly in the market is we have, let's say, high here, we have high here, but then we have a low right here. So what happened to that low? You can see that that low got taken out just now. So we are going to mark it out like like this, and that means that we want to see some kind of reversal to the upside. So market took out liquidity, but one more thing market did, I don't know if you guys spotted, but we retested this fair value gap right here. So on the daily time frame right now, we took out the daily liquidity, we retested the fair value gap. So what is left is basically for us to just enter the market, and let me show you how we are gonna do that on the daily time frame. So on every single time frame is gonna be the same thing, so exactly the same thing as right here. But let's see how are we going to even enter the trade. So we are going to enter the trade off of the fair value gap that fails to hold the market. So let's say we have this fair value gap right here, that was last fair value gap left while we were going to the downside, and what the market does, it rejects off of this fair value gap. And let's see, this is basically few days, so it's not gonna be quick. We enter the long position like this, put our stop loss, let's say, below the body of this candle. And what is the logic basically to enter the trade like this? It is basically that this fair value gap did not get retested like this and basically rejected the market to the downside, but it got invalidated because the market closed above it. So we actually need a market closure above the fair value gap for us to be able to enter the market. And let's see what is gonna happen. So market is slowly going to the take profit, and this will literally be a week or two. So right now let's see how we would refine this trade from the daily time frame. Okay, so let's go back to right here where the market actually came down and retested everything, and we are going to go down to the 1 hour time frame. So let's see what do we have on the 1 hour. So we just swept this liquidity on the daily, we are retesting the fair value gap, so we are just waiting for some kind of entry to the upside. So let's see what is gonna happen. So we get a push to the downside right now, and what happened right here, let me replay this. We left, as I said, we left a fair value gap right here, we left a fair value gap right here. But what happened with this fair value gap down here, you can see that this fair value gap got inversed towards the upside. So we had a closure above it, and basically that is sign for us to enter the market. What we can do is target something to the upside, and as you can see, market is going beautifully to our direction, and it doesn't matter what we target because we are going with the overall trend. So you can see that on the daily time frame, if you used to catch like 1.5 risk to reward, and on the hourly time frame we can catch a lot more bigger risk to rewards. Okay, so basically this was the entry on the hourly time frame, and you can see how good it played out. So let's right now scale even more. Okay, so let's go down right here again, and let's go to 15-minute time frame. So let's see what happened with the 15-minute time frame down here. We are gonna delete everything. I'm gonna delete this fair value gap because it's just ugly, and let's see what happened on the 15-minute time frame. So we have not left the fair value gap. Here is the first fair value gap we have left right here. So let's see what is gonna happen. So market is going to the upside, and it made a push to the downside again. We left the new fair value gap. So what are we gonna do? We are gonna mark it and wait for this fair value gap to get inversed, and there it is. We have that inversion of the fair value gap towards the upside. What do? We enter the trade on the closure, stop loss below, we target something to the upside. It's not that important, and let's see what is gonna happen. So market retested this a little bit, and look at what is happening. So market is just pumping from here, and you saw the 5 risk to reward on the hourly chart. This time we can get who knows how much, and you can just see the market pumping because we are aligning with the daily time frame, and you can just see how huge of the profits we can catch. So I don't have much to add except just this is working so beautifully, because that's the whole logic of the market, aligning the higher time frame with the lower time frame, and that's when you catch the most beautiful wins. So let's right now scale it down even more to the 1 minute chart. So the one very good trick I'm gonna learn you right now is how to enter the 1 minute time frame, but it's not gonna be the same as 15, 1 hour and daily time frame. So just before we get into it, a like and subscribe would mean a lot to grow my community, and basically to keep giving you stuff like this for completely free. And also at the end of this video I'm gonna give you something for completely free, so stick till the end. Okay, so what is the difference basically with entering the 1 minute time frame? So personally, if you want to enter the trades like this, let's say that are just dumping towards the downside, you don't want to just jump on the 1 minute time frame and look for the straight entry towards the upside, because there is gonna be like 20 trades in here, and who knows how much of them lost and how much of them won. So what are we gonna do? We are going to, let's say, wait for this kind of trade for 15 minutes to get inverse to the upside. So once this happen and like this, so we literally inverse 2 fair value gaps to the upside, we are right now gonna hop on the 1 minute. We are going to wait for some kind of pullback and a better entry. So let's see how does that happen. So if we delete this trade right here, we go right here and we are waiting for that kind of entry. And here we are about to get tapped into the 5-minute fair value gap right here. So let's see if we do get opportunity right now, because what did we say? We always want to see some kind of manipulation. So here is the manipulations, then a retest of the 5-minute fair value gap, and right now all that is left is basically for us to enter the market. So let's see right here if we do enter the market. So there it is, last fair value gap right here, got inverse to the upside. Basically what do? We enter the market. We can put our stop loss right here, but that is sometimes way too tight, so you can always give it some room like this. And what can we do? We can target who knows how much to the upside, and let's see how is it gonna play out. So looks like it's gonna go to our favor. I'm gonna put this to 10x so we can see where is it gonna go. So yeah, exactly what I told you guys, we can catch insane rewards. So you can just see it pumping to the upside basically, and we can catch who knows how much of the profits right here. And I know there's gonna be some questions about this setup that happened earlier right here, and you can see that we only swept liquidity at this setup and we did not retest this fair value gap down here. And also we had few setups right here. So basically this setup also the same thing right here. You can see we had a small little fair value gap right here. It took some liquidity to the left, but you can see that it lost because we had not retested the fair value gap. So it's always very important to wait for the delivery, which is fair value gap, and for the liquidity sweep, which is manipulation, and then for the right entry model to present if you want to catch trades like this. And now that you made it through the video, I want to give you something for completely free, and it's gonna be my 10-page playbook of my whole strategy, where it's basically gonna be a little bit more of the details I show you in this video. And also guys, as I said, if you enjoyed this video, if you found it helpful and learned something new, you can drop a like and subscribe. It's completely free, and it just means a lot to me to build out this nice community of the traders who actually want to make it in trading. And also for some traders that are interested, I do offer one-on-one mentorship down there in the description if you want to check it out. And basically with all of that being said, I'm gonna see you guys in the next video. Peace.